stop paying so much in taxes. Just stop. All businesses receive a default tax classification, which can result in paying more business taxes than are necessary. In this video, I'm going to reveal a hack that you can use to save 15.3% of your personal tax liability, plus ways to reduce your overall tax burden, which means more cash back in your pocket. If you have a partnership or an LLC, you definitely need to check this out. Hi folks, Chip Schweiger, the Green Leaf CPA, and I help everyday cannabis entrepreneurs build and grow exceptional businesses using the same growth tips that the big guys use. Welcome to Ask the Green Leaf CPA. So this week, let's talk taxes. They touch everybody and every company. And as a business owner, you probably dream about finding ways to reduce your tax liability, and especially for cannabis companies because of Section 280E of the Internal Revenue Code. You know that section of the tax code that says if your business touches the plant in any way, even if it's in a legal state, you're subject to IRC 280E? Well, most cannabis companies have high tax bills because under 280E, you're taxed on gross profits rather than on net profits like a mainstream business. And that can mean paying up to an 80% effective tax rate. And that's just crazy. And when you formed as a partnership or an LLC, these negative impacts are passed through to the owners of the business. Now, there are ways to legally mitigate the impacts of IRC 280E, and I'll put a link to that video down below so that you can check it out later. Which reminds me, if you're new to this channel, go ahead and hit that subscribe button and click the bell so that you'll always be the first to get my tips and tricks. If your company is set up as a single member LLC or a multi-member LLC, the tax liability passes to the individual members and carries the potential for a large personal tax liability. Now, some companies make special distributions to cover the owners or the partner's tax liability that's passed through to them from the company. But the tax liability is still on the individuals. So another option is to elect to be taxed as a corporation. That way, the tax liability is paid by the company rather than being passed through to the individual members or the partners. And typically, this tax election is made by filing IRS Form 8832 to change your business's tax classification. So what is IRS Form 8832? Well, the form is called an entity classification election, and it's a form that certain businesses can use to elect to change how they're classified for federal tax purposes. All businesses receive a default tax classification, which can result in paying more business taxes than are necessary. But if you're eligible to use this entity classification election form, you can change your tax election status and potentially lower your personal tax liability big time. Now, Form 8832 is a voluntary election form that you file with the IRS to let them know that you want your company to be taxed as what's called an S-Corporation. And doing so alleviates the personal tax liability that comes with a partnership or an LLC. Now, not every type of business can use Form 8832 to change their business's tax classification, but the following business types are eligible: partnerships, multi-member LLCs, and certain types of foreign entities. These entities can use Form 8832 to elect to be taxed as a C corporation, a partnership, or as a sole proprietorship. Now, if you're currently an LLC taxed as a corporation, you can also use Form 8832 to revert back to a previous tax classification. Eligible businesses that don't fill out the form will be taxed based on their default tax status. And here's the pro tip. If you're happy with your current or default tax classification, you don't need to worry about Form 8832 at all. And keep in mind that your business can only change its tax classification once every 5 years. Wait a minute, what if I'm not eligible to use Form 8832? Don't panic. Sole proprietorships and single member LLCs taxed as sole proprietorships don't actually fill out Form 8832 to make an S-Corp election. But you can file Form 2553 instead, which accomplishes the same thing, and I'll put that link down below as well. Also, if your business is a corporation that wants to be taxed as an LLC, don't file Form 8832. Instead, contact your Secretary of State to find out how to convert your corporation to a partnership or an LLC. So you may be asking, why is changing your tax status so important? Well, here's the bottom line. Filling out these forms can affect your personal bottom line. If you don't fill out Form 8832 or 2553, your business will be given that default tax classification, and you may end up paying more in business taxes than you really need to. If you choose wisely, though, changing your tax election status can potentially save you thousands of dollars per year. And that's because members of LLCs and partnerships are considered self-employed individuals. Now, remember that pass-through thing that I talked about? As such, you carry generally a higher tax liability than corporations. And these higher tax liabilities are usually in the form of self-employment taxes that you pay rather than the portion of the FICA taxes that a typical company would pay for their employees. And that means you're personally on the hook for 15.3% in additional taxes. Add to that, individual tax rates vary depending on your taxable income, including the income from your cannabis business. And because of IRC 280E, that only makes your personal tax liability higher. So while individual tax rates can be as high as 37%, corporations are taxed currently at a flat rate of 21%. And this creates a huge opportunity to save tax dollars. Just keep in mind that the way one partner is taxed in a partnership applies to all the partners. So it's a good idea to discuss the personal tax strategies with all your partners before you make an entity election change. And there are some nuances as to how you run your S-Corp, but those are straightforward to address. So when is Form 8832 or 2553 due? Well, often tax deadlines for businesses are very strict. But because these forms aren't mandatory, they don't really have a deadline per se. You can file them at any point in a lifetime of an eligible business. Whether you operate a brand new company or one that's been around for decades, you can still elect to change its entity classification. Now, there are some basic rules though. When filling out the forms, you can include a date that change should take effect, and this date must fit within a certain time frame, namely up to 75 days before you file the form or up to a year after you file the form. Now, an accountant can help you choose the ideal effective date to put on your entity classification election form. There's often some strategy involved, so make the right call to help you optimize your business's taxes. And if you didn't file the form on time, you can also talk to your accountant because there are ways to fix this. Once the IRS accepts your entity election form, your new classification will remain in place forever. There's no need to file a second form a second time unless you want to change your entity classification again. And as a reminder, in most cases, you can only change your classification once every 5 years. So you may want to have to wait a little bit. But there are a few exceptions, so consult your accountant to see if you can make a new election before the 5 years are up. Once you've sent the form in, all you have to do is wait for a reply. The IRS should send you a letter either accepting or denying your request to change your status within 60 days. If you haven't heard back after 60 days, you can actually go to the IRS or call them or send a letter to the service center to check the status on your form. And that's it. You're all set. If your entity classification is accepted, just make sure to attach a copy of the form to your U.S. federal income tax return for the first year that's effective, and you're good to go. Now, if you've got questions about changing your entity's tax classification and putting more money back in your pocket, drop me a note at www.𝗃greenleafcpa.com. My goal and the reason I got into this industry is to help you and your cannabis business grow. If you've enjoyed today's video, please give us a like, and if you'd like to see more, hit that subscribe button and click the bell. And if there is something that you're stuck on in your cannabis business, go ahead and drop a comment down below. I'd love to hear from you. It just makes these videos that much better when I get to help you with your cannabis business. Now, we drop new episodes each week, so I hope you'll join us again. We'll see you.